Alright guys, so de-dollarization is getting much worse than we expected. Now there are many aspects to the world shunning the reserve currency. When it comes to the trade war, the biggest shift is countries moving towards bilateral currencies. Instead of using the dollar for every single transaction, exporters and importers they're opting out. And here's a simple question. Who's the biggest exporter of goods to the world? It's China, and they're taking de-dollarization to the next level. They always wanted to do it, and Trump's tariff war just gave Beijing the perfect excuse. Now, today, over 30% of China's trading goods and services are done in their local currency, the RMB. That's more than double just half a decade ago. For cross border transactions, the dollarization is even more severe. Over 50% of the total are done in the Chinese currency, up from 1% in 2010. Cross border receipts, including financial flows, which means the Chinese economy is starting to eat into dollar transactions beyond just trade. Now, should we really be surprised here? When you decide to cut away your imports and make your exports so expensive, trade with the US was slow. As a consequence, the demand for dollars starts to drop. Now, the tariff war can't be undone. There's no reverse gear here. Trump wants to reshore the production of everything to the US, even movies and furniture. The instability of the US government is also becoming a new problem for the dollar. There's big worry that US payrolls will get hammered, destroying consumer demand in the country. In addition, economic data could be delayed, which is very frustrating to global investors. Just that alone is enough to send the dollar tumbling down again. The entire US economy is functioning like an emerging market, and that is causing a lot of uncertainty for holders of US assets. You can't make proper decisions if US data like inflation, money supply, or unemployment suddenly has a blackout. Investors still be operating in the dark. It gets even worse when the President of the United States can't seem to understand his own economy. Now, we know what happened in the United Nations talk. Trump basically tore them a new one. But the joke is actually on him. Apparently, trillions upon trillions of dollars in commitments are pouring fiercely into the US.
In just 8 months since I took office, we have secured commitments and money already paid for $17 trillion. Think of it, 4 years, less than a trillion, 8 months, much more than $17 trillion is being invested in the United States. And it's now pouring in from all parts of the world, making this once and again the best country on earth to do business.
Now, this is the problem with statements from the Trump administration. You really can't tell which ones are serious fact based talk and which ones are just stand up comedy. But let's look at some facts here that are undeniable. It's a clear sign that the dollarization is only going to get worse. The value of the dollar versus other currencies is collapsing. This will be the worst year since 1973, when the Bretton Woods Agreement finally broke down. In the first half of 2025, the dollar index fell by nearly 11%. So all exporters, bondholders, and buyers of dollar cash were the big losers here. And let's look towards the horizon. Big semiconductor tariffs are coming. 100% pharmaceutical tariffs are already online. Even less trade with the US will be conducted now. The risk of holding US assets just keeps escalating by the day. And that's why central banks all over the world are reducing their treasury holdings for gold. They are starting to swap a risky asset for one that will appreciate in value, especially during this era of endless deficit spending. It's an own goal by Trump, Besson, and friends. Now, since 2015, especially since 2020, there have been two clear trends. Countries are deleveraging their treasury holdings in blue. It has gone from 35% down to nearly 20%. Meanwhile, their share of gold reserves has been rising higher. It has gone from sub 10% to over 20%. And within a few months, gold share of reserves is going to exceed US treasuries very easily. The world's supposed safe haven investment, US bonds, is about to get dethroned, and this is a big slap to the face. And truth be told, the moment the West confiscated Russia's frozen assets, it was written in stone. It was game over. Even if we take away the threat of confiscation or the trade war, the biggest problem facing the US is debasement. The Biden administration used to spend a lot, but Trump is taking things to the next level. US spending is simply out of control at this point. Now, despite record tariff revenue, the amount of spending just can't stop. Trump needs to give more bailouts, or US industries themselves, like farming, will start collapsing. And we know how efficient government spending really is, isn't it? Now, apparently, Scott Bessent was caught reading a message from the Agriculture Secretary about US government spending. We know Bessent plans to give Malaysia's economy $20 billion, but is it money well spent? Argentina sold a large amount of soybeans to China when we would normally be selling to them. This gives China more leverage over us. Is the bailout money really furthering US interests, or is it another example of money thrown to the wind? Now, sure, tariff revenue is growing. It hit over $30 billion last month. However, the way it's spent is mind boggling. This will only lead to more monetary debasement and a collapse in US confidence. Now, everything has gone topsy turvy here. Trump and friends, they're determined to swim upstream against the current. It's truly bizarre.
The golden age that President Trump promised us is really on the way. And in fact, the things that you like the best, the capital spending and so on, those are the numbers that are really the strongest. In fact, if you go back and look to when President Trump took office, capital spending, equipment spending, which is the stuff that really drives wage growth, is up 7%, not at an annual rate, 7%. And so there's a massive investment boom, and that's why we're seeing all of this GDP growth. We're almost 4% growth.
No matter how much money you throw into US industries, it won't matter under this backdrop. Punitive tariffs are increasing input costs throughout the US. Supply chains have not been established yet. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Even with the money from Japan, Korea, and the EU, there's no guarantee of a victory here. In fact, the money might never come, which means the US will be forced to spend more and more. According to the Peterson Foundation, the federal deficit has reached a new monstrous level. We have hit a 2 trillion deficit in 2025. That is truly horrific, and the tariff war isn't helping things. In fact, the trade war just ramped up US government spending. The only periods worse than today are the pandemic spending years of 2020 and 2021, which means the wastage today is phenomenal. For every dollar spent, only a fraction reaches the final destination. This is extremely inefficient. Countries all over the world are watching this currency debasement. The spending is not efficient and is not driving true growth. It's only driving inflation higher and higher. So if you're sitting in China or any BRICS countries, does it make sense to hold dollar assets? I don't think so. And that's why the demand for gold has been rising. Everything ties back down to monetary debasement. Now, sitting on trillions of US bonds isn't a good idea when the underlying asset, the dollar, is losing value. Your national reserves are now compromised. You don't really control it. US fiscal and US monetary policy really determines what happens. Now, since 2008, something has changed in the global reserve game. Before then, the world was actually net sellers of gold because the dollar was relatively stable. The US economy was growing and things weren't that bad yet. But in '08, after the TARP bailout, the world realized that the US will use the reserve currency as their own personal piggy bank. And once that flip switched, the world started to buy gold in massive amounts. We are heading back to the Bretton Woods era, especially after the events of 2022. The tariff war is going to last for at least the next 3 to 4 years. Chances are central banks will continue selling off dollar assets to pile into gold. Now, so far, it's mainly BRICS countries doing the buying. Imagine the jump if other G7 nations join in. The price of gold has officially gone above 38.20, and this is an incredible bull run with futures up by over 43%. Gold prices rising is just a reflection of the dollar strength. Global investors and central banks, they're choosing to swap their dollars for physical gold bullion, which reduces the currency's value even further. US imports becomes even more expensive as a consequence. This puts the US in a very tricky bind. Sooner or later, Trump will need to free up some money to push the deficits further. But where are the funds going to come from? You can't directly do QE and print money. That will crater the dollar even further. You also can't push borrowing to the moon overnight. That will rocket bond yields higher. And as the prices continue to rise, the odds of a US gold revaluation becomes even more likely. US gold reserves have hit an incredible $1 trillion in value. For argument's sake, let's play along and assume all the bullion is still in the vaults, all within Fort Knox. But pay attention to the book value of gold held by the US Treasury. It's only $11 billion. And that means should the US government do a revaluation, it would unlock nearly $1 trillion of free cash flow. Now, is this guaranteed? No, it isn't, but chances are starting to grow, especially when the US deficit and gold prices continues to grow. And there are also zero sources of liquidity left that the US can access without direct consequences. So I hope you don't believe Trump. Trillions of dollars are not suddenly coming to the US to save the economy. It's still going to come from Besson creating and selling treasury bonds. So free money from gold is looking really, really tempting here. According to Bank of America, a gold revaluation will be a windfall. It allows the TGA to be paid down, increase inflation, and add more cash into the entire banking system. For the US, higher inflation will drive higher GDP growth. So, in a twisted way, it's good for Besson, who wants to drive growth at all costs. This means a gold remarking would add some relief to both fiscal and US monetary policy. Once again, it's like QE without the actual QE, and most people will see this as consequence free money. But there will be a big side effect of this revaluation. Now, the US will unlock $1 trillion of liquidity, and yes, it can help to pay half a year's worth of deficits. So, Trump will look like a hero, at least for a while. But if a gold revaluation happens, prices will rocket even higher because this will be an admission that US deficits are in trouble and the dollar is cooked. There's no other way to see it. And the second consequence is that the US will help make China even richer. Official figures put Chinese holdings at over 7% of total reserves, and that's around 2,300 tons of gold. But are those really the real figures? Chances are it's 5 or 10 times that number. Now, I believe China has at least 10,000 tons of gold. That's the bare minimum. A gold revaluation is like turning China's mountain of chips into Mount Everest. That will turn the Chinese economy into an even bigger financial giant. And this will undermine everything from dollar and US bonds going forward. So the US is really caught in a lose-lose situation. Revalue gold and you might win the battle short term, but chances are you'll lose the entire economic war. However, if they don't, Trump might run into another spending or bond crisis down the road. Which will the US choose? And that's gonna be the $1 trillion question. But let me know what you think. Will countries continue dumping bonds for gold? And will the US do the unthinkable and revalue their gold in Fort Knox? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.